good trader's a lot like a therapist. You're always trying to measure the mood of the market. You need to know if it's feeling jubilant or feeling depressed or just plain goofy. Back when I used to trade at my old hedge fund, it was always easier when I had a good read on Wall Street's emotions. I got a lot of practice. So believe me when I say that today's market is a forgiving market, so forgiving, I guess you could call it naive. Let me give you some examples. Last week, one of the top performers in the S&P 500, Chipotle, got clocked because New York City sued the chain for violating some work rules involving scheduling. Stock plunged 6%. It's part of a broader rout in the restaurant cohort. Today, though, Chipotle's back, falling nearly 26 points. Why? Because they're adding a new steak dish, the first in 3 years. Sure, the carne asada may be a limited time offer, but it's got buyers going wild. I think it's silly. Although as someone who's been recommending Chipotle relentlessly from when it was in the 300s, I'm thrilled. Beyond Chipotle, the whole restaurant group charged higher, in part because Cracker Barrel put up good numbers. This chain is the most vulnerable to higher gasoline prices, as it's got so many locations dotting the interstate highway system. But Cracker Barrel delivered a strong quarter, and the price of crude came back down today. So the stock surged $3. It's like we never even had an oil shock. Hey, by the way, it's taking Yum up with it. Then there's Ulta Beauty. Oh, you've been asking about this one. It's been in the doghouse ever since it reported a breathtakingly bad quarter at the end of August and lost 30% of its value in a single session. But today it's showing signs of life. I know the cockroach theory, where if you see one missed quarter, that means you're likely to have money more. Yet buyers are lining up to take advantage of what seems like a developing floor in the stock. Could the punishment be over? You know, it wouldn't surprise me. Ulta's a very well-run company, and I think its earnings miss was the result of a rare misstop, not a continuum. Got a few more examples of this market's forgiving nature. A little over a week ago, Tyson Foods slashed its guidance, mostly due to commodity market volatility. The stock got slammed from $93 all the way down to $80 a week later. But now Tyson's working its way back up. In fact, it's already rebounded to $89. Or take Corning. Last night, the company slashed its full-year forecast thanks to some display glass issues, telecom, television. Yet the stock only lost less than $2, or about 6%. I expected far worse. That's the market's mercy in action. Finally, Nucor, the big steel maker, pre-announced some ugly numbers, talking about earnings 75 to 80 cents a share. Wall Street looking for $1.03, and what happened? The stock barely got dinged. I think it makes a certain amount of sense, frankly. Nucor is the best steel company in America, perhaps the world. Fantastic balance sheet, history of dividend boosts, always profitable. Still, in a rough tape, the stock would have been down $2 minimum. Put it all together, and this market reminds me of My Girl by The Temptations. It's got sunshine on a cloudy day. To me, that means take advantage of this forgiving tape and look for the dips like the ones you will get tomorrow when Cramer fave Adobe as well as FedEx open for trading. Stick with Cramer.
Don't miss a second of Mad Money. Follow @Jim Cramer on Twitter. Have a question? Tweet Cramer. #MadTweets. Send Jim an email to madmoney@cnbc.com or give us a call at 1-800-743-CNBC. Miss something? Head to madmoney.cnbc.com.